which is shocking because its ticker is BBW, and who doesn't love a BBW? Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of May 31st, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. That was an exciting week. Finally, I feel like that was the most positive week we've had in the stock market in a long time. It even ended on kind of a bit of a sour note on Friday afternoon. Everything kind of took a step backward, but still all of the major indices are higher than they were at the start of the week. We had some of the, as the media calls them, meme stocks, as I like to call them, sentiment stocks, GameStop, BlackBerry, AMC shooting up towards the end of the week. We're going to talk about AMC specifically a little bit today. Also, on Friday night, I had a bit of a live stream on Twitch where I was kind of doing some pre-market stuff on Friday, showing you guys my portfolio, that sort of thing. Eventually, I am going to be bringing that stuff to YouTube, that type of content to YouTube. I might be doing it kind of like Friday pre-market, not every weekend, but sometimes. That way I could just chat with you guys. It was a lot of fun, streamed for about 2 hours. All right, let's get started. For anybody who's new to the channel, just a reminder, I do publish all of my technical analysis every single week. This is my practice that I'm sharing with you guys. The link is going to be below the video. First news story, per Bloomberg, AMC's 4-day surge slaps short sellers with $1.3 billion in losses. Slaps short sellers, slap short sellers. Say that a couple times quick. So the movie theater has surged 120% this week to a 4-year high. Mentions on social media have soared with AMC strong trending. I love that. Not much really to cover in that article, but I do want to show you guys the chart so we could see what happened with AMC this week. You could see the volume just absolutely shoot up here. And this high volume actually goes back about 2 weeks where we've had an increased level of volume. And then this week it just exploded upward. Friday morning, we ended up hitting a high of 36.72, which is the 4-year high. The closing price of the stock was 26.12 and it's down to 25.65 after hours. Now, one thing I noticed while I was doing my live stream on Friday morning and the price was shooting up, I was watching the level 2 data streaming in for this AMC thing. I don't really think this was necessarily part of the squeeze. I really think this was just retail hype for whatever reason, because most of the level 2 orders coming in were like 100, 200, 300 shares. You didn't see the big bulk orders coming in. So I do think this was just kind of a retail driven type frenzy on AMC. That's my take on it. Now, I'm not saying the squeeze isn't going to happen for AMC. I'm holding some AMC myself, but this one really just seemed like a bit of a retail frenzy, piranhas in a pool, that type of thing. Next news story, I don't want to spend a lot of time on this, but President Biden gave a speech in Cleveland this week talking about the infrastructure plan. Cleveland is a really interesting place to talk about infrastructure, seeing as the infrastructure company I'm most bullish on is Cleveland-Cliffs. We ended up seeing Cliffs rise substantially with his speech in Cleveland, his mentions of infrastructure, the White House budget release, and then some Cleveland-Cliffs news that I'll get to in a moment. The big discussion here is that Biden's most recent infrastructure plan is for about $1.7 trillion, and the Republican senators offered a counter proposal of $928 billion. Now, it doesn't really take much of a genius to see the two sides are very far apart still. The Republicans are basically willing to cede about 50% of what Biden is proposing, and he has already come down substantially off his original, I think it was a $2.6 trillion plan. Also this week, the White House did release their budget. This is from the Office of Management and Budget. Biden's quote at the top, "Where we choose to invest speaks to what we value as a nation. This year's budget, the first of my presidency, is a statement of values that define our nation at its best." As always, this channel is politically neutral, but I am going to look at the points in this budget to where we can see at least where the US is going to be spending the bulk of its money. The budget begins with Biden's American Jobs Plan. The goal is to create millions of good jobs, rebuild the nation's infrastructure, and position the United States to outcompete China. You've been seeing the US versus China thing throughout the entire Trump presidency, and it seems like it's going to be continuing through the Biden presidency. There's many economists that are forecasting China to overtake the US as the world's largest economy relatively relatively soon, probably within the next 10 years. So Biden's going to be using this to make sure that the US either doesn't lose its top spot or that it can stay competitive with China. Just hitting some of the highlights here: fixing highways, rebuilding bridges, upgrading ports, airports, and transit systems. Hello, steel. Drinking water, renewed electric grid, high-speed broadband, homes, commercial buildings, schools, revitalizing manufacturing, securing US supply chains, investing in R&D, and training Americans for jobs of the future. In Korea, I see the buzzword all the time, fourth industrial revolution, where like the jobs of the future all pertain with AI, clean energy, that type of thing. So it seems like Biden wants to go in that direction with some of the job creation, but almost every other point of this infrastructure bill is immensely bullish on materials companies, on steel companies, on concrete companies, on pavers, on construction companies. Like, this is kind of the type of thing you want to see with infrastructure. And keep in mind, this is just the budget. This isn't the infrastructure bill yet. The big investments are going to be into schools, research, readiness for another public health care crisis in light of COVID, making a major investment to help end the opioid epidemic, which could be interesting for your investments. I know I'm invested in a couple of opioid painkilling companies, so this is something I'm going to be keeping an eye on. Tackling the climate crisis, gun violence, housing vouchers, civil rights, blah, blah, blah. Nothing in the budget is terribly surprising, but I find it very interesting that all of the infrastructure points come first. The job creation points come first. Biden is a left-leaning president. He's a Democratic president. When I first reviewed the budget, I really thought that the first things covered in the budget were going to be about education, about healthcare, but seeing the infrastructure stuff in there as the top priority, seeing the job creation stuff as the top priority, that made me feel even more bullish on some of my infrastructure investments already. But solely from the perspective of my infrastructure investments, I did not mind this terribly. Big news from Cliffs, just continuing this to get it out of the way. Cleveland Cliffs is to fully redeem its 5.75% senior notes due in 2025. The company expects the total payment to holders of the notes, including the redemption premium, to be approximately $407 million, plus accrued and unpaid interest to the redemption rate. And the CEO said, "Our business continues to generate consistent and strong cash flow, and we anticipate this trend to continue for the foreseeable future. With that, we don't need to wait any longer to accelerate our deleveraging plan. The redemption of these notes using available liquidity nearly 4 years ahead of their maturity date represents the first step in our mission to achieve zero net debt. Going forward, deleveraging will remain our top priority." So Cleveland Cliffs has been talking about now for the last 2 quarters deleveraging. Lorenzo Gonsalves, their CEO, has really put a focus on deleveraging to improve the credit rating of the company. They're using their free cash flow from the current steel boom to pay off debt 4 years in advance. This is absolutely incredible for this company to grow going forward. Last year, they acquired all of ArcelorMittal's US operations. So they already did their big acquisition. Now they're paying off their debt. They're heading towards a high production, zero debt era of this company, which as an investor is incredibly exciting to see. This day was the one where Biden was speaking in Cleveland and the company released the PR about paying off its debt 4 years early. And you can see we actually gapped up. The day before, so Wednesday, we closed at 1892. Thursday, we opened at 1948, so like 50 cents higher, and we ended up closing that day at 2033. Now we bled off some of those gains slowly into Friday, but we held most of them, closing at 2012, rising up to 2018 after hours. So Cleveland Cliffs is looking mighty strong. Amazon's ad revenue is now twice as large as Snap, Twitter, Roku, and Pinterest combined. You know, I don't really understand why those companies were chosen for this headline. It almost seems like somebody was trying to make the math work. Whatever, it kind of gives you some perspective on how big Amazon is. The major growth in Amazon's advertising unit means its revenue contribution is now 2.4 times as large as Snap, Twitter, Roku, and Pinterest combined, and it's growing 1.7 times as quickly. Amazon's other unit, which is primarily made up of advertising but also includes sales related to other service offerings, grew revenue a massive 77% year over year to more than $6.9 billion in the first quarter, the company reported last month. In other Amazon related news, Amazon will buy MGM Film and Television in an $8.45 billion deal. Netflix, look out. The Netflix look out warning there is obviously very tongue-in-cheek by the writer. Netflix has nothing to fear from an Amazon MGM combination. MGM has not had the most successful film franchises of late. The only one that really comes to my mind is the Bond franchise. franchise. Big James Bond fan, by the way. The latest James Bond film has been infinitely delayed because of the pandemic. No Time to Die has really turned into No Time to Premiere. MGM's enormous library and underutilized franchises will be major assets for Amazon's streaming efforts. While Amazon has virtually unlimited money to spend on film, TV, and music, last year's content budget was $11 billion. It doesn't have a century's worth of content. That perhaps is the most impressive thing here. MGM does have a century's worth of content. Its history goes back over 100 years. Something worth noting though, MGM sold its rights to a lot of its classic movies years ago to Ted Turner. Turner Classic Movies now holds the rights to some of the MGM greats like Gone with the Wind, Lawrence of Arabia. That being said, it still does have an incredible library of IP that Amazon now controls. This news came out the 25th and the 26th between the ad revenue and the MGM acquisition, and you can see immediately it did drive up the price of Amazon before coming back down, and we're actually lower than before it was announced. I just want to see James Bond in theaters again. Next up, Palantir was awarded a $111 million contract to provide a mission command platform for the United States Special Operations Command. Now, superficially, you might look at this and be like, oh wow, Palantir got another military contract, great. But $111 million, I believe, is like 10% of their forecast annual revenue. So this contract is a significant deal. And when this was announced, we could see a huge trading volume day right here on Friday, where the day before we closed at 2270, and then on Friday we ended up rising as high as 2475 before coming back down to earth a bit. This little point here kind of gives you an idea for the software. Palantir software is used for the full life cycle of today's continuous operations, from planning to review, coordination, and approval through to battle tracking of the actual mission execution. Palantir has become an invaluable asset to the US military, and it will stay so moving forward, so we can expect to get more and more of these contract announcements and renewals, which are perhaps as important as the original contract itself. Next up, we had Virgin Galactic go into space last week, and we talked about it, and I was so excited about it. And I actually mentioned closing out my position, but I did an undisciplined investor thing when I saw this news this week. Virgin Galactic launches its third successful space flight, and Richard Branson is training right now to go up into suborbit on his company's ship. The reason this is really exciting is because this provides a huge catalyst. Branson has been talking about how he wants to go up on his birthday, which is July 18th, I believe. Right now, we're starting into June. We're going to have one more test flight between now and his birthday, and the test flight is going to show that the craft can operate with 4 passengers along with the pilots. Then Branson's going to be going up to clear the way for the FDA clearance for other people to go up. Sending a billionaire into space from a PR perspective is an incredible opportunity. The stock rose significantly just on the successful test flight, but this is a totally different level, and I'm hanging on to my shares here for another 7 weeks or so before I make a true determination, because I really think this flight is going to set the stock off, assuming the plane doesn't blow up or something horrible and catastrophic. Since the test flight, the company has just been absolutely flying. On Friday at the beginning of the day, we actually hit $35. Keep in mind, we were down at $14 just on May 11th, 3 weeks ago. So $14 to $35. This has been an incredible run this month of May. I don't actually think it's going to be stopping anytime soon. The volume is still pretty solid, and we have 2 flights coming up. Consider that we've already had celebrities book tickets on this flight in advance, and some of the celebrities that have booked tickets include like Ashton Kutcher and Justin Bieber. And while I don't really care about them, they both have very popular social media presences. And imagine what the stock price is going to do after Bieber uploads like an Instagram story inside the capsule floating around. Just wrap your head around that free PR for this company, and you can understand exactly what the share price is going to be doing here going into the future. So I know that was a bit of a 180 there for me. I ended up wanting to sell my shares, but Branson announced that he was training literally the day after I made my last video. So I want to hold on because he reaffirmed that he's going up very soon. Build-A-Bear Workshop, a company that I've never covered on my channel, which is shocking because its ticker is BBW. And who doesn't love a BBW? The company reports increased revenues and pre-tax income in fiscal 2021's first quarter, exceeding both 2020 and 2019 first quarter results and raising its annual guidance. I don't much care about this company. I'm not a big teddy bear fan, but this is impressive. It generated $91.7 million in total revenue, an increase of 96.7% compared to the fiscal 2020 first quarter. Their e-commerce demand expanded by 87% compared to the fiscal 2020 first quarter, and their gross profit margin was up 52.8% compared to 17%. I'm not an analyst here, but I'm going to take a shot at what happened here. People are isolated with the pandemic. People are sending bears to their family members because they can't visit them in person, and that's why the e-commerce numbers are up. That's why the gross profit margins are up, and that led to this big increase. Obviously, I don't really think this is sustainable, but this is still really exciting for the company and the shareholders, and the stock price just jumped up on this ridiculously last week. Before this news, Build-A-Bear was sitting around $10 a share. We ended up jumping up just in 2 days to a high of $18.14 before coming back down to $15. So still, even after the peak and the pullback, we're up 50% in a matter of 3 days for a teddy bear company. Cool. This is big news for a lot of my SPACs, and specifically for companies like Citius Pharmaceutical. The Russell, which is the small cap index, is in the process of reconstituting itself. It does this annually. The 2021 reconstitution calendar for the Russell US indices, May is the ranking month, and then June is the transition month. So we just finished up the ranking month where companies were kind of fighting to get their market caps up, and now we're going to be entering the transition month where as soon as this Friday, we're going to get announcements about new inclusions into the Russell. Now you're going to see a lot of these new inclusions in the Russell are going to be SPACs. And that's specifically because the structure of a SPAC, where it's a new company, a shell company that merges with a former company and ends up already having a somewhat artificially high market cap, that's going to meet the Russell inclusion. So you're going to see a lot of SPACs added into the Russell. But one of my investments personally, Citius Pharmaceuticals, should be put into about the top 25% of the Russell. So that's going to be big news for Citius this week, and probably it's going to be a catalyst throughout the month because the initial reconstitution is announced in the beginning of June, and then every Friday throughout the month we have updates coming out of the Russell. So this should be a really good month for our small caps that are getting included into this index. The reason that index inclusion is a big deal is because this forces ETFs that cover and represent the entire index to suddenly buy large swaths of shares to represent their ETF truly and accurately. So you're going to see in June a lot of rises in some of these small cap companies that are going to be added to the Russell. So before the month starts, go ahead and take a look at your SPACs, make sure you're happy with your positions, take a look at your Citius Pharmaceuticals, make sure you got enough, because this should be a good month with these index rebalances. Very briefly, I don't want to dwell on it, but I did talk about the option last week for Toll Brothers. They reported their earnings. Their home sale revenues were a record for quarter two, $1.84 billion, which was up 21%. Their EPS was $1.01. Their backlog value was $8.69 billion at quarter two end. Specifically, the backlog was what I was talking about last week when playing this option, where home building companies are so busy that they have these backlogs that they can't even access. We saw this with Lennar, with KB. We see this again with Toll Brothers. The quarterly total revenue was $1.93 billion versus $1.55 billion expected. Huge beat. So if you remember, I mentioned buying the $60 calls on this one. Monday morning, we opened up at about $60.36. I entered the calls. I ended up selling them by Wednesday at a 25% gain, half of them, and the other half at a 30% gain. And I tweeted about this on Twitter. Shameless plug, if you're not following me on Twitter, go ahead and do so. Whenever I do make an options move, I try my best to tweet about it so you guys are aware of what I'm doing with my positions. Tweet. The company ended up rising all the way up to $65 and above this week. This was incredible. I had people tweeting me saying they made like 50% gains in 1 week, which is awesome to see. I'm so happy for that. My target was about 25%. I reached that so early in the week that I held the others for a couple more hours, really, and then it hit 30. So I'm satisfied with my gains, and I'm so happy knowing that you guys were up. Like, I had a couple people tweeting that they ended up hitting a 58% gain on their options. So Good job, guys. Also, to everybody else who sold kind of at the same time as me for the 25-30% gains, I hope you're proud of yourself for being disciplined investors, because a 25-30% gain in only 2 days of holding an option is incredible, and that's not something that comes very often. So don't feel bad about missing the 50% gain. A 25-30% gain is awesome. Let's take a look at the upcoming earnings for this week. Now, keep in mind, Monday is a holiday, so we've got nothing there. No companies are reporting on Friday. All of the earnings are going to be condensed into Tuesday, Wednesday, Thursday. Truly, there's not many things that I'm very excited about here. We have some tech companies, Digital Turbine, Zoom, HP, C3 AI is reporting, DocuSign, CrowdStrike, but I mean, nothing really that I love. We have some retailers reporting, including Duluth Trading, Land's End. One retailer that's somewhat interesting is Five Below. If you're not familiar with Five Below, it's like a dollar store, but it's a $5 store. In my mind, the way I have this playing out is it's going to be like a Walmart versus Target thing, where Target starts experiencing better growth because people have this horrible idea of what a Walmart shopper looks like, so they choose to go to Target instead and pay a little more. Now, I'm imagining the same situation is going to happen with Five Below, where people judge Dollar General, Dollar Tree. They know what a shopper looks like who goes there, and instead they're going to go to Five Below. To be clear, I think all of that is just stupid crap, but honestly, I feel like that's what's happening with this retail industry, and you're going to see Five Below reporting some absolutely insane gains over the years. This week, for my options plays of the week specifically, I want to take a look at a couple of companies that are reporting on Thursday: SecureWorks and Quannex. SecureWorks shares drop after surprise full year loss forecast. This was their last earnings report. To kind of summarize this for you very quickly, the company is a security company. It's a cybersecurity company similar to FireEye. They have a legacy security platform which they're phasing out, and they're moving towards their new platform, Tegus. Tegus is in operation, but the company is spending a lot of money on R&D to make it very competitive and fully flesh it out. All of the reviews that I've read about Tegus are good so far, but all of the reviews I've read about the company's legacy platform are terrible. So you have these mixed perceptions. The early adopters of Tegus like it, but the majority of people are not really high on this company. Because the company is going to be spending so much on R&D for Tegus, they downgraded their outlook from 140 down to about 134 million. And for the year, SecureWorks sees revenue of 535 to 545 million, down from 578. This is a really big downgrade, and this was announced months ago back in March. So this is when that earnings report came out, and the stock ended up entering a slide. We closed this day at 1454, and we ended up sliding down over the next couple of weeks down to a low of about 1313. Since then, it's been up and down, and then we ended up having this rise. Now, this rise happened right about the same time the Colonial Pipeline went back into operation. My hypothesis here is that this rise in the SecureWorks share price is not because of anything the company did. In fact, they lowered their guidance. Their earnings report should objectively be crap. But around the time of the Colonial Pipeline, the White House talked about cybersecurity. We had cybersecurity in the news all over, and you ended up seeing all cybersecurity companies rising in share price. SecureWorks got swept up in that. People forgot or didn't even know about their last earnings report and their downgraded guidance. So this share price is going to fall off a cliff on the bad earnings report, because they're going to be like, oh wait, what did I invest in? You could see their last quarter, they had the decreased revenue that I already talked about. The net income, they lost $10 million because of the R&D expenses. The company's losing a lot of money, even though it's an established company. The analysts even downgraded this company. 8 analysts are covering it. 3 of them are saying hold, 5 of them are saying underperform, and the price targets right now are going from 12 to 16. So you can see we're right now in the middle of that range, but also a bad earnings report is really going to add a lot of volatility to it. This one is really just an intuition play for me. So I'm going to be playing some very close dated options, FDs for any of my Wall Street Bets fans out there. That's right, I'm going to be paying some FDs, which are some improbable close to expiration options here. And I'm going to be buying puts for June 18th. That's the closest I can get. I'm probably going to be buying these $12.50 puts, which are currently about $80 a contract, and I'll be opening up probably about 5 contracts of this one. So once again, this is a gamble. This is an intuition play. This is one that doesn't necessarily have the technical backing, but I really think this was correlated with the news with the Colonial hack, like I said. June 18th, I'm going to be buying the $12.50 puts, somewhere around $80 a contract. I'll be buying them Tuesday morning when I get in. I'm not going to hold them all the way until June 18th. I'm just going to hold them up to the earnings report, see what the stock is doing. I don't really want to hold them through earnings because of IV Crush, but I'll tweet about what I end up doing with that this week. I am going to be playing 2 options this week. My second one is going to be on Quanex. Quanex is a small cap building products company that operates in the US, the UK, and Germany. Their products and solution, they sell vinyl profiles, insulating glass spacers, window and door screens, fenestration components, which are like latches and hinges and handles and stuff, kitchen and bath cabinet components. Now this is their investor presentation. Their 2021 guidance was already raised in Q1. They were projecting net sales of 12% growth year on year to the midpoint, and they ended up reporting a 17% growth in revenue Q1, which worked out to be a higher net than they were expecting. You can see here after the earnings, the big beat and the climb up. Same thing here after the earnings, we kind of climbed up there. This company is associated with the housing market. And the beautiful thing about Quanex is that their market cap is still under $1 billion, and they only have 33.6 million shares outstanding with a float of 33. Anytime you see a low float on a company like this with a potential big earnings beat, it screams large price movement because there's just not the normal amount of shares to trade for the company. So you end up seeing these substantial price rises, or to be fair, declines to the opposite end. The company ended up hitting a high of 29 about 3 weeks ago before retracing down to about 26. And the financials here, you could see the difference. You know, the company reported last quarter 7.35 million net income, which was higher than anything before it. And you could see the 17% growth on their revenue. I'm going to play this one a little bit safer than with SecureWorks. I'm looking at the July calls. So this is still aggressive. This is a 48-day to expiry option, but I'm going to be buying the $25 July calls. So these are about $250 a contract. I'll probably buy a couple contracts here. And this is the $25 July 16th calls. And my thesis here is the same as with every other home builder. If Quanex is supplying a lot of the windows, doors, cabinets, glass laminate for new homes, new home construction, guess what? We've got a backlog of new home construction. My guess is that the company can barely keep up with orders. Now, the reason I'm not long dating this option is some of the stuff from the CEO indicates that he feels like the first half of this year is going to be stronger than the second half of this year. So I don't want to carry calls into September and risk going through the third quarter earnings report and having it be disappointing. So I'm going to stop the calls at July for that reason. And also I'm going to be crossing my fingers that the company doesn't give any negative guidance about half two in their second quarter earnings report, in line with what the CEO kind of hinted at in the first quarter earnings report. It might be me misreading the situation, but he really did seem to imply that the first half of the year is going to be better than the second half. Anyway, let's hope he keeps his mouth shut. The earnings should be stellar. I'm going to be playing both of those options this week, buying puts on SecureWorks, buying calls on Quanex. There you go. A little bit of good news for you guys. I am recording a DD video today, and even better news, it's going to be on a penny stock, legitimate below $1 penny stock. It's a biotech company. Sorry about that. I haven't covered one of those in a really long time on this channel, and I'm not going to tell you what it is because I will release this video on Tuesday morning at 9:45 a.m. because Monday there is no trading. So please check out the video on Tuesday just to whet your appetite a little bit. I've identified 3 large catalysts this year between now and the end of the calendar year for this company. It's trading at right now a strong historical line of support below $1, and there's been a lot of insider buying. So just whetting your appetite on that one. That's it for me today. I hope you guys enjoyed the video. As always, if you're new to the channel, please check out my Webull referral link below the video. If you sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins. Because I'm partnered with Webull, the stock that I'll be getting is worth $30 or higher. Chart. Webull's the excellent analysis program I was using throughout my video today for the charts, for the news aggregation, for the analyst forecast. Please check it out and show them some love. As always, if you enjoyed the content today, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. Happy trading, stay safe, and I'll see you next time.